Hi everyone, this is Rob Roy of Elliott Wave Options, and welcome to this trade review of our recently closed trade ID number 216 on MHK. As you can see, it was in our volatility strategy, a long strangle position, as the majority of alerts in our volatility strategy are strangles. Not all of them, but the majority are. I'm calling this one our Fibonacci trade. Take a look at that return, a 61.8% gain, right on that same Fibonacci percentage number, 61.8, that if you've seen any of my recordings, you know is a strong point of support resistance within the Fibonacci world. So 61.8% gain in just 5 days. The entry was sent out as an alert to our subscribers on May 21st. You can see the pattern here on the chart. We had a big vertical move to the downside in MHK, followed by a symmetrical triangle. That's my favorite pattern for setting up these out-of-the-money strangles. A vertical move can be either to the upside or the downside, but is then followed by the symmetrical triangle, setting up a potential breakout in either direction. In this case, the stock did break to the upside, and we closed the position out on the 27th, and here's the chart as it looked when we sent out the alert to close the position. Now you can see that on the 26th we had this big break to the upside. The profit at that point in time was about 36%. The average gain on these strangles runs about 30 to 70%. That's kind of the window. So once we move in that range, it's a consideration to go ahead and close the position out. The reason that it didn't and waited is the fact that MHK manufactures carpet. And the numbers had just come out, the new home sales numbers had come out, and they were a lot better than expected based on the fact that housing prices had gone down, mortgage rates had gone down. So the expectation was that this may continue to the upside, along with the fact that it hasn't really rallied the way the rest of the market had. Now with that in mind, decided to hold it, but then we gapped up again on the 27th, so now we have two gaps and we have more separation from the 10-day moving average. I'm going to say it again, you know the rule, no security in any time frame gets very far away from its 10-day moving average. So now we're a bit overbought. We've got a nice vol spike in the calls, so we went ahead and closed the entire position out. I did want to call your attention to the DMI. You can see there's good separation between the two directional indicators. The ADX is starting to move up. It hasn't moved above 20 yet, but it's getting there. So this is one that we'll keep an eye on for a potential impulse directional trade if that DMI continues to move higher and moves within the two directional indicators. Hope you found that informative. Be back to talk to you again next time. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.